market gut check. Buyer's market or seller's market?
It's easily a buyer's market right now. I've been saying it for a year, but the statistics that were just shown last week really paint a good picture. If you look at one specific statistic, it's a little misleading. Right? More sales are happening, so wow, the market's so healthy. Not really, actually, there's more listings now too. The sales to new listing ratio is like 20%. So what that means is 1 in 5 properties is actually selling, which is not good.
It's crazy.
It's really bad for sellers.
Normally 50%, depending on which market you are, but 20-something% across the board
It's the lowest,
is horrendous.
It's the lowest I've ever seen. Nothing is really selling. Like 1 in 5 is really low. That means if you have a listing right now, there's a good chance you're not selling. So good luck. You need good advice. And what's happening now is a lot of agents are buying listings, which means that they'll come up to you, they'll say, what do you think it's worth? Oh, you think it's worth $2 million? Yeah, for sure, we can sell it. But they can't actually sell.
If they're not going to make a sale, there's no
Because
no
what
point of
happens
even
is a lot of times they'll wear you down. You'll list it for 2 months, see that there's no action. They'll say, maybe it is actually worth 1.8 million. Yeah. Time to slowly come down. Meanwhile, the agent that told you that in the first place would have had your property sold. So be careful. It's really dangerous right now. And one small step like that, one wrong move could just totally wipe you out of the market.
Yeah, if it's too good to be true, it's probably not true.
Exactly.
And in a down market, like for condos, for example, it's still coming down and you're lagging the market a little bit. It's not going to happen.
I heard one person say, our agent told us to wait for the fall market. Yeah, the fall market's actually looking worse than what it was before. So you can keep waiting and waiting, but if you want to reposition your portfolio, it's always now. Now is the time, especially if you're moving laterally. You don't want to wait and lose more value than you've already lost.
Yeah. So a lot of times, like people have condos and they want to move into the Toronto multiplex market because they see that the cash flows are better, the potential is better, right?
Yeah.
They're actually not moving laterally when you think about it. You're selling your condo, which is probably less in price, and then you're buying something slightly more. You're taking a hit on the condo side. On the house side, you're actually getting a bigger discount.
100%.
Possibly, right?
Yeah.
So yeah, like you have to accept the fact that you're going to lose on one end first.
Yep.
I know it's tough, but the bigger benefit really is that you save more on the buy side. Plus, in the long run, obviously we know cash flows are better. You can add value to lift the property as well. And once you have a positive cash flowing property, then you can qualify for more mortgages and it just makes it easier to scale.
You can carry it easier.
Exactly.
There's a lot of benefits there. And what I've been recommending to my friends, clients, even just random people when I speak to them, they say, should I buy a house now? And I'm like, it depends on why you're buying it. Especially if it's your first property, I always recommend buying an investment property or at a minimum, house hack. Rent out your basement, live upstairs. This is gonna significantly improve your quality of life, your time to retirement, your monthly expenses, like everything. It's way better to do that. I'm telling you right now, you need to do that, especially if it's your first property. It will change the game.
Yeah, so house hacking for people who might not know is that you live in one unit and you rent out another part of the house just to help with expenses. There is a benefit there. You still could very likely qualify for the capital gains tax exemption and you're also saving on your housing expenses too. So win-win.
It's what I
there.
did. It's what you did.
Exactly.
It's what
most of our team. Yes.
And yeah, it's so underrated. Don't go and buy your dream house right away, especially if you're in your late 20s or early 30s. Why do you want your $2 million dream house? There's time. Because if you do that, you're going to be house poor for a long time. It's going to be 30 years, 20 years. If you do this other step, within 5 to 10 years, you're going to see financial freedom. Actually, immediately, depending on what you buy, your monthly expenses are going to be from like $4,000, $5,000, $6,000, $7,000 to $1,000 maybe. Maybe you're living for free. This is a huge potential to actually get you to your retirement goals.
Yeah. Most underrated area for value.
There's sort of two.
Okay.
Okay, so my first, it's not really underrated. It just might be overlooked.
Okay.
So any prime location, but for me, especially if you're looking at like the Seton Village and Trinity Bellwoods area, you know, the Little Italy, these homes, which historically have sold for $2 million, now you can pick up for 1.4, 1.3 million. This is a really good entry point for one of the most prime locations in the city. And if you're looking as an end user, it's like the best area to live. If you're looking as an investment, everyone wants to rent there. Highest rents in the general location. Those locations I would definitely look at. So number one, prime location, Trinity Bellwood, Seton Village. Number two, I would say where you can get the best bang for your buck now is that Eglinton West area. Anywhere along the LRT line that's going in, Dufferin and Eglinton and Caledonia and Eglinton, these locations, we're finding significant discounts on prices. Like it's insane. Like some of the properties we picked up were significantly under market value. So I would look there, especially if you're just trying to get in, you don't have a lot of savings, you want high cash flow, you don't care about the prime absolute location, those locations, look at it. It's a good opportunity there.
What's the reason why that second area, the near Egg West areas, is seeing such big discounts these days?
Yeah, Eglinton West is a unique area because right now it's in that middle of that gentrification phase where there's a lot of properties there that have been totally renovated, even new builds. There's a lot going on, but the infrastructure is not there yet. The transit line is still, I don't even know when that's going to happen. It's supposed to be any day now, but that's not in place yet. The businesses are slowly moving in. So we're seeing a lot of change in the neighborhood, but the house prices haven't reflected that yet. So extreme discounts, really good to get into that market.
Okay, let's talk about predictions. We were talking about how some agents were telling people to hold off for fall, and we're like, no, just do it now.
Womp womp.
What do you think will happen in 2026?
2026? Scary. I would say for most people, you should be afraid. It's not what we normally would expect. Normally, 7%, 8% increase in house prices, everything's going great, everything's smooth. I believe that 2026 is going to be make or break for a lot of people. I don't see house prices increasing in 2026, at least significantly. They're probably going to stabilize or go down a little bit more. I'm thinking about 5%. We still have some room in the freehold sector. In the condo sector, I can't even put a number on it because I think the next 2026, 2027, it's going to be really bad for condos. So I wouldn't really touch them unless you're getting significant discounts. And this is what I've told people too, because they've asked me, we've heard it's not good to get into the real estate market right now. House prices are still going to drop. Yeah, they actually might continue to drop, but can you get an even bigger discount today? So if, let's say the average price is $1 million and they're saying it's going to go to $950. This is just simple math, right?
Yeah.
But you can pick up a property for $850 now. You're beating the expected decrease in value. If you can beat that dip, then you're still getting a better deal. So that's where I think a lot of the purchasing power is. And right now in that big buyer's market, you have the potential to negotiate all these prices way lower than expected. So that's where the power is. If you wait too long and now the sales to new listing ratio is closer to 40 or 50%, you're not going to be able to negotiate like you can right now. So sure, you might get that 5% discount, but that 5% isn't as good as a 20% discount that you could have potentially gotten with negotiations.
I think certainty is a big thing, right? If you buy now, you can certainly, for the right deal, get 15% off. There's no unknowns there. And then you're like, okay, but if I wait, I might be able to get 5% off. So would you rather choose 15% for sure now or possibly 5% later on? I think like it's a no-brainer question, right? I really can't say whether we're going to go down 5% next year, go up 5%, who knows?
Well, I'm not in the business for average deals too. Like we get the best deals.
Exactly.
Right? So if you're always buying the best deals, and especially now when you have the most power, it's a great time. And this is the reason that our team keeps buying properties. It looks really strong for us.
Yeah, people think that we're just telling people to buy, but secretly, not so secret
not really
because
secretly.
we're doing it now, but like
I'm literally on camera saying it. So
so
we're terrible at
we
secrets.
have picked up how many this year?
6, 7. 6, 7.
6.
7.
What I actually, so my kids always do that.
Right, 6,
and then
7.
apparently there's 4-1. I don't know what 4-1.
I'm not there yet, but I know the 6, 7.
So because kids do it so much at school, right? And the teachers are getting annoyed, so they're playing along with it. I'll count to 10, and they're like, okay, 1, 2, 3, 4, 5,
6, 7.
Yeah, and then once the kids say it too much, they get annoyed and they stop saying it.
That's smart. Yeah, get it out of them. It's gonna be a clip. My friends are gonna kill me. You're gonna laugh.
What is it about? It's like about a basketball
It's a
player?
basketball player.
Yeah, who's
and
like
there's
around
like a rap
6'7".
song and he's 6'7".
I think we already answered your last question. Would you buy right now? Yes
Of course.
or no?
Yeah. I would. There's not really many markets I wouldn't buy in, to be honest. Again, we're not playing with averages. We're getting the best deals on the market. So if you consistently buy the best deals on the market, you're going to be in a good spot. If you're going for the Burr method, some value add at the property, you can predict that with some certainty. You can't be 100%. With my property, I added about $300,000 in value within 6 months. If you can predict that and continue to do that and do that once or twice a year, you're going to be in a way better position than if you're waiting for that one home run deal and it takes you 4 years to buy it. So I'd rather just keep accumulating.
Yeah. For the Burr method, I think it works well in a flat market, which I think we actually are in. Prices might come down 5%, up 5%, but it's going to be like teetering. Yeah, which is fine as long as it's not a down market where prices might drop like 30% next year.
Which we only have seen once in the last.
I think the worst is behind us for the 30% drop. And then if prices go up, then it's better for Burrs.
Just remember, the reason that we buy in Toronto is because of all the industries in the city. It's a major city. It's the biggest city in Canada, and it probably will always be in our lifetime the biggest city. All the businesses are here, right? So if house prices were to drop here significantly, the banks become the biggest landlords. They don't want that. They lose all their money. Our whole banking system will collapse. They're not going to allow that to happen. It's like the worst case scenario for everybody in the country. So I feel pretty certain that's not where they're going to go. So they're going to lower interest rates to help people actually be able to carry this so that they can get paid their mortgage fees, their interest, the banks continue to make money, and the economy stabilizes. So I'm not too worried. Now, the smaller markets, like we've seen in a few cities, Windsor being one of them, you can lose a lot of your market value very quickly, especially if just one industry. So tariffs completely destroyed some cities, and it's going to get worse. Toronto, it hurts us a lot, but we're still strong. So if somebody's looking to buy, don't necessarily jump into a secondary market because there's actually a lot more risk in those markets. Even though there's less money involved, I personally think the risk is much higher.
Yeah.
You can't really
CMHC actually just released a stat on where rentals are being built. So in places like Calgary, Edmonton, I think Montreal and Halifax, these areas, like most of the new construction coming up are rentals. I would say like 80 to 90% of the new construction are rentals. Whereas if you compare it to Toronto, I think it's half of that. And fundamentally, our market is much stronger. We have a lot more demand, right? But we don't have enough rental supply coming up. That's why I think our market is going to continue to remain strong. But then in those markets, all the investors have been rushing to the West Coast or whatever, chasing cash flows. But the demand is not actually there. And once these get built, you know what's going to happen to prices, right? So, yeah. Womp womp. Okay, so I had this question. Biggest mistake people are making in this market?
Not using me as their realtor. It's the worst mistake you'll ever make.
Need music and then we're done.
The biggest mistake I see is people rushing to buy their end user home because they see that it's a good time to buy. It is a good time to buy, but you're going to be putting yourself in a very tough position. Again, always buy either an investment property or something that you can split into multiple units where you can rent out. Unless you're making $500,000 a year plus, and I actually mean that, $500,000. If you're making that much money, pat yourself on the back, buy whatever you want, you're fine. But even if you're making $200,000, we're talking the 1% here, $250,000, rent out your basement, especially if you're young. There's no reason not to. Trust me, unless you have 3 kids and all this junk everywhere.
If you have 2 kids, you still need your basement.
2 kids, you can get by for a couple of years.
Coming from a person with no kids.
With no kids, yeah, but I know how the world works. You don't need a basement.
Yeah, you don't need it, but it's nice to have.
It's nice to have. You know what else is nice to have? $2,000 in your pocket a month extra. That's a lot nicer. Get rid of that space. Do it. You're not going to regret it. Trust me on this one.
All right. So that's it.
Yeah, definitely follow me on Instagram.
And follow Elevate as well.
Yeah, both of us.
Yeah, if
but
you need...
my handle's right over here.
We're competing now.
Yeah, no, follow both of us. Samantha has the best, honestly, it's the best real estate content in the city.
I think
for
it's
sure.
a good collab. We always talk about how our team is so strong
Team,
together.
yeah. Samantha's quote of the day, we put the team in team.